Okay, recap for Tuesday, the 10th of February 2026, right? In my last video, yesterday, basically on Monday's recap, I said today is going to be consolidation. And what you know, today is consolidation. Who would have thought, right? It's just basic understanding of the news that's coming out, how Monday moved, which should have been the consolidation day, but because how they lined up the news, it's most likely they're gonna line up this day's consolidation for anticipated for news like NFP tomorrow, so they can start manipulating tomorrow. So in the high time frame, if we just start on the daily, because Monday moved up so high into the suspension block, right? I did not expect price to go anywhere today as well. That's an addition. Why? Because we're so close to our limits. We're genuinely so close to our limits. How much higher that we could go, right? Because we're not gonna close above this suspension block, if I'm right? Because I'm still bearish. Like I believe this is just a Judah run, thinking people that hey we're gonna go higher, but no, we're actually gonna come back lower, right? Or we're gonna come back and consolidate and then still go lower. You know what I'm saying? So we can't really disrespect what's gonna send us lower. We could open tomorrow and wick into this order block, for example, but we're still not gonna close above this suspension block. On the 4 hour, we went back to this busy, right? There's a volume imbalance, so you're gonna count it from here to here, and there's sensitivity right there. In regular trading hours, right? We closed, or we're gonna close, right? Because the market is gonna open 9:30. The last opening range gap that we left, right? All these little stuff. It's just we just efficiently deliver in the market, but at the same time we kind of like making it look like it's going higher. And in what I believe, this ain't going higher, and this is just the Judah swing basically. Think about it right there, Judah, and then we're dumping. Okay, Judah we're dumping, or we're consolidating, going slightly higher than it. You know what I'm saying? We're not really gonna leave this range unless we go bearish, or I could be wrong, and then we're actually gonna break the whole structure, and then from there we're gonna actually be bullish. But at this current moment, it's bearish. Okay, so now knowing this and already knowing that it's gonna be a consolidation from yesterday, or let's say you came from the market today, of like, oh, it's a consolidation day, right? It's not gonna go anywhere, right? If you didn't have the understanding that it's not gonna go anywhere because it doesn't have targets, really today, genuinely, there's no targets on either side, right? Like the most, respectable target that you could say is, let's say we can go discount of this range, right? And that would still be a bit of a stretch, right? Why? Because there isn't really anything that's enticing us to go to discount the range right here, right? There's no internal liquidity, which I mean like fair value gaps, like on the lower time frame. I mean, of course, there's gonna be a 4 hour one without even need to check it. Yeah, it's right there, and there's gonna be one on the hourly or something. But there's nothing that would tell us, okay, we need to go back to discount, because if we need to go back to discount, that means we want to go discount then go higher today, right? But this is consolidation day, which means we want to stick to our place, right? We just want to keep going up and down in our own range. So the only thing that I'm keeping my eye on is two things, right? Currently at 9:30, right? What we're gonna do, right? Because there's two scenarios, and there's only two scenarios that are gonna happen at this market open. 9:30. Currently, we have a 2022 model by taking this high, displacing market structure shift, fair value gap at discount, right? And technically, this should send price lower, taking all these sell side liquidity, and could fail, right? So when it fails, what could happen? Boom, it goes up and takes buy side liquidity. So what does that give you? At 9:30, we have the option of, alright, market goes down, then I'm gonna long. Market goes up, then I'm gonna short, right? Regardless, it doesn't matter. They're both high probability. Okay. Before it goes to discount, yes. And what's gonna confirm it, right? When we have two fair value gaps, right? And let's say for this example, 15 minutes, you'd want to see price close. Like let's say it takes the liquidity. It would still need to close inside it But if it left one inefficient, right, it didn't wick into it, for example, you would want to see it wick into it. It doesn't need to, but that's the best case scenario. It wicks into it and close in the previous one, or just closes even higher above midpoint, whatever. It just doesn't close below, right? It doesn't genuinely change the structure, because if that happens and it closes below, then I'm not just looking at discount. So even if you wanted discount, I would demand like a wick, right? Just to confirm that would go back up to here, right? Or otherwise it's going to be something like a PM session, right? So we know now that there's two scenarios: go up to go lower to go higher, right? And it's generally just taking liquidity. So we're going to see what the liquidity is, right? Right there, we have buy side liquidity for the PM, right? We have sell side liquidity for the Asia. We have sell side liquidity for London. We have the initial sell side. We have PM sell side. We have, lunch sell side and then PM sell side. So we have 5 sell sides compared to 2 buy side liquidity. That's a touch. So what's most likely that the market is gonna do? In a current 2022 model, it's gonna go down lower, right? Why? Because, well, ES is still in a bearish structure, right? However, ES is going to be in a bearish structure to like rebalance its own range rather than taking the lows, because it's already taking the lows. So ES needs to go higher. So the plan already is you want the market to go lower without ES taking it slow, making a higher low, because ES wants to target its highs, right? It wants to target its London high that it left intact, and it wants to target the initial high that it left intact, and on top of that, previous daily high or the PM high. So that's the game plan. We need an SMT. We need it, right? It has to be there. It's one of them ones where like it's not just it has to be there for ES to continue. So now we got the criteria. Let's go back and see what the market has done, right? So now we can drop to the 1 minute. And we already know that it's most likely not gonna keep these highs, make relative equal highs or something. Regardless, it's most likely gonna do that. If not, then it's gonna go up, and then we're gonna need to like wait and then take that short, right? Let maybe ES catch up to its highs, whatever, right? As you can see, market has its wick, which is to make surely that it's relative equal highs, and then displaces, right? Boom. Okay, creates our first presented fair value gap. It already takes 2 liquidities, but we have 3 more that's left, right? So it's smooth, it's nice. First presented fair value gap. That's an entry, but kind of right now I'm running a rule that I'm not entering before 940. So if this candle smacked the first presented fair value gap again at 940, I would have entered. Hey, I'm just following my current rules, right? And this doesn't matter, right? And this because this could be like the short, and then you're gonna wait to buy a long. But I know that I'm looking for the long, so I'm not too fussed about this, right? I'm waiting for basically the highest probability one. Once one is done, I'm looking at the other one. Now, remember that 15-minute gap, right? We're looking at 2 things. This, no closures, right? And I would prefer look at like something like 5-minute. And whatever, right? So we wanna visit to this if possible, right? We wanna visit to this if possible. And on the 5-minute, if we can see the same thing, right? If it's there, we'd want the same exact thing, right? We can see that it visited one that was left on the 5-minute. So we don't want a closure above this, right? And we can see this current 15-minute candle. This 5-minute. We're gonna see the 15-minute. If it closes, right? And we know that it visited this one, so this one is not really needed. But if it really gets overextended, right? And I haven't looked at this, right? It's just straight like eyeballing it, right? I did other stuff for this one. So now that it goes down, takes that liquidity, right? Goes up. So now that it visited this one, right? There's potential. See, that's the point. There's potential that it could reverse here. But looking at structure in the 15-second, right? There's stuff for it to go down. As you can see that it's holding, this gap is holding it down. And then boom, it goes to where it should go, the wick. But is it gonna hold? Because listen, you can't marry the idea. If this doesn't start reversing from here, then it's garbage. And then boom, look at that strong reaction. That's not enough. Still have to wait for this, right? This was the holding price. Boom. A second that there's a closure above, and you could have entered aggressively, by the way. This is just being extra, right? Now I'm doing all my checks. My 15-minute, yes, we closed above, right? On this current candle. On the 5-minute, we have closed above this one, right? There's no closure below. Rejection block on the 5-minute, right? So I'm just gonna mark this, which let's just say it's on the sell side, right? The last sell side, right? So you can see it. There's a rejection block here. This candle goes into it, expands. What does that mean? That's safe sell side. Boom. This candle closes, and now I know where it closed in the 15-second. What I'm trying to mark is this order block, but I can see that it's already hit. So I'm gonna try and mark the midpoint of this wick, and that was my entry for the long, right? So I don't know if that's gonna make it as a paper, right? Let's just say entry here, right? As you can see, next candle hits the entry. I expect this, right? And let's get rid of all this garbage right now, right? We know where it reversed. As you can see, midpoint exactly of that small inefficiency, right? Because market on these days is gonna be just extra with it, right? It's gonna go to every little minute little detail. It's gonna go to it, right? So we got rid of all this sell side. There's only one way for the market to go, and that's buy side, right? So here's my entry. I expect this to stay open. Why? Because again, it's in this range, right? This is how a breakaway gap forms, right? It leaves the range, right? It should leave this open if it's really bullish. Stop loss still below here because that's the rejection block low, right? That it went to it, right? Because it could still visit the gap, right? If it's a normal fair value gap, stop loss before here, but I'm looking for the rejection block stop loss. It's unlikely, very unlikely that it would go to it, but or even visit the gap is unlikely. That's why I enter here. But again, you gotta play it the maximum safe, give the opportunity. The second that we enter the first presented fair value gap, stop loss goes to break even. But the second, right? Because then in this structure alone, even in the 15-second, this market should not come below this gap, which is its own breakaway gap, right? From visiting this, that's its own breakaway gap. And I want to see first candle in the first presented fair value gap, right? Run by run, it needs to go and close boldly inside it, right? Closes boldly inside it. The second one, I want to see it close outside it. Perfect. Seen them two, right? That's it. Done. How do you know that we're going to hit the highs, right? Market goes all the way up, right? And stalls, and then you expect this one big candle. You always when it does this, right? It's stalling behind a lot of liquidity. 1, 2, 3. You want to see speed, right? Speed. In terms of if there was other targets, right? You'd want to see this hold, but I genuinely expected a big short into the range, right? And that's why I shorted this in like a demo account, and then just see the boom one. I knew this candle was coming. That's why I even took a partial here, because I knew they could do this candle, right? Like it is gonna come. They're gonna bring it back. There's no targets above, right? And to me, once I seen this Stallman, I already closed it, by the way, here. I already was like, okay, this is probably our range now. This low to this high, and we're not gonna go beyond it, right? I believe I'm slightly wrong because I believe the market actually got out the range and eventually went to the discount. However, it's not in a session that I trade, right? So like let's say all the way here in WPM, we're still in the same range, right? All the way, right, at 2, we're still in the same range, right? So it might been allowed to go in the final hour macro at market close. Yeah, see, final hour macro actually done what it's supposed to do, which was go to discount for this day, right? Discount from this low to high, as you can see, and I'm guessing it should retrace back into the range after that. But yeah, in the AM session, PM session, it's not allowed, right? It's got to stay in this range, right? And then this is just the start of the new day. So yeah, that's the market recap. I guess a simple day, really. There's not really much to it. It's just you should just know that it was an accumulation day and how to trade the accumulation day. And in terms of the entry, but you could have made it as simple as, oh, you seen a breaker, enter on the breaker, right? And then you target the highs. It could be as simple as that. You don't need the extra confirmations. You don't need to why it stopped right there, right? Because of like the 4 hour, 15 minute, whatever. You don't need all that, right? You just need to know, hey, there's a PDOA. It's respecting, let's say, the 15, the 1 hour. Let's say it's just a 1 hour, for example. There should be a 1 hour fair value gap. Hey, it visited the 1 hour fair value gap. It's respecting the 1 hour fair value gap. It's probably at the midpoint or close to it, right? It's close to the midpoint or something. And yeah, that's all you'd be knowing. You're like, all right, cool. There's a reaction. There's a breaker. We have no sell side at all left, and we have buy side. We have three buy side now, actually. Right. So, what does that mean? I should be looking for longs, and nothing beyond that because there's no higher time frame targets above currently in the moment. Right. So, once that is tagged right there, you exit and you call it a day. And this was around 120 points. All right. Anyway, that's the market recap. Peace out.